The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' tune means it's time once again for the Option Block, your bi-weekly source for all things options related, some insight, some analysis, some unusual activity, some education, and perhaps once in a great while, some entertainment as well. My name is Mark Longo from the OptionsInsider.com, as well as the Options Insider Radio Network. And we're going to change things up for you a little bit today, listeners, because on the last show we had that crazy big, very live, very loud panel that we did over at the new home of KYO. That was fantastic. That was great fun to get everyone together in a room. We don't do it very often. If you had a chance to check out the Twitter posts from that, too, you also saw that we had a few adult beverages helping to facilitate the conversation, shall we say. So that was a very fun episode to do. Great to get everyone back in the room. We're doing the opposite today. We're back on Skype, and we have a truncated panel yet again. We had to move our recording time due to some scheduling conflicts here, so it's just going to be me and the man holding down the OX hot seat, none other than Mr. Sean Fitzgerald, the wallflower himself, starting to bloom here on the old panel. A soon-to-be returning regular. Sean, welcome back to the show.
Mark, always great to be here. This market is a day trader's heaven today.
Yeah, it's an interesting one today.
I mean, especially if you're trading futures. I mean, we were up 85 points right before the ECB rate announcements and quickly spun 130 points down 50 in a matter of, I think it was about 2 minutes. And it's all day long. We've had some wild swings. And then I think we were down about 140 on the Dow, swung back down to almost even, and then ended up close down to 200. And now we're starting to trickle back a little bit more, down about $1.30 right now on the Dow.
Yeah, it's a crazy day, so I think we should just dive right into the trading block.
The Trading Block.
All right, and welcome to the Trading Block. And as Sean alluded to earlier, it is indeed Mr. Toad's wild ride in the old market today. We've had quite a bit of action. We were up earlier, then as Sean mentioned, ECB cut the legs out from the market, and we were down quite a bit, 1.5%, I think, in some of the major indices. We've since retreated from that. We were rallying close to even. Now we're back down about 1% on the day today with most of the major indices except for the NASDAQ, Dow, and S&P. As we're recording this around 1:30 Central Time here in Chicago, a little bit earlier than our usual post-close recording time, we're seeing most of the major indices down about 1%, and the NASDAQ, the laggard again today, down about 0.5% right now. And the good old VIX cash We talked about it underperforming of late, and it certainly seems to be doing that again today on a day when there's wild sell-off and also just wild vol of vol. We're seeing things really swinging around quite a bit. The definition of intraday volatility, we're seeing the VIX selling off today relatively aggressively, down nearly 4% in the VIX cash to 18.26. And, this is a kind of a recurring theme we've had on the option block lately, where we've discussed VIX and some of its bizarre movements of late and its tendency to underperform expectations given a lot of the recent developments and movements we've had in the marketplace. And certainly a day like today, we've cautioned many of our listeners time and again not to rely on the VIX as any sort of real near-term volatility hedge. It's really great for those dramatic vol moves where you have a huge explosion in vol and you pick up some VIX upside or some VIX verticals, and it works very well. But for some of the people out there who tend to use it as their sole portfolio hedge, days like today tend to make that a more difficult position to manage or to justify to yourself. This seems to play into the narrative we've seen a lot lately, Sean, of for whatever reason, despite all the news we're seeing that's moving the market and, things coming out of the Eurozone, yesterday's hiccup, which we'll get to in a minute, a lot of these developments that are sending shockwaves through the market, despite that, we're seeing people extremely willing, perhaps over-willing, some might say, to really sell premium going into the weekends. Here we are, Thursday afternoon, still an hour plus to go before the close, and it seems like they're already starting to take some premium out here, which, given all the activities we've seen of late and all the developments, probably not the wisest course of action. We've talked quite a bit about the wisdom of having some coverage for weekend risk these days, because there is quite a bit that can happen over the weekends, and certainly the marketplace doesn't seem to be keeping up with that in any way, shape, or form. Any chance these traders have to hit the bid in VIX options or to trade down some vol in the S&P, they're taking it, which is surprising, I think, given all the other developments we've seen of late. Is that kind of what you've been seeing as well? I know you have a lot of paper coming in for people trading SPX puts. We talked about it last week on the show. Some people were blasting out downside SPX puts with some fairly decent results. Are you still seeing a lot of premium sellers even going into this environment today, Sean? Are you starting to see people starting to mix up their paper a little bit over at OX?
Yeah, both on the retail and the institutional side. It is very surprising. We have, even when the Dow was down almost 200 earlier, I think the VIX was unchanged. Usually on a day like this, you would think the VIX might be up 10%, but no, it's the opposite right now. But by the end of the show, who knows? Maybe it will be up 4%. There's definitely some strange moves going on what these traders are doing with selling the vol with. This isn't the best of news that's coming in. Starting all the way back to June's jobs number, and of course we got July's tomorrow. Sooner or later, I think the VIX, you might just see a quick spike one day where it just may jump 10 points, and might be some people caught.
Yeah, earlier today, you're right, it was even unched on the day for a while, the VIX cash. So interesting developments out there. Of course, watching those futures, it's a crazy game out in VIX futures right now as the term structure is getting a wee bit out of whack. So I'm sure that's contributing to these developments as well. But it is so difficult, you're right, to pinpoint what is the root cause of VIX cash activity these days, because we see these bizarre developments in the futures, we see these bizarre developments in the ETPs, we see these bizarre developments in the S&P 500 options. So there's many masters pulling on the VIX these days, and who knows which one is triumphing right now versus which one will be winning at the end of the day. You're right, we've seen some crazy adjustments in VIX cash towards the end of the day. Perhaps we'll see something similar today. But speaking of some interesting developments, we saw a very interesting one yesterday. People are calling it the mini crash, a mini May 6 all over again. But yeah, we had some interesting developments yesterday where people are calling it the mini crash, the mini May 6, the whatever you want to call it, August 1st, the new May 6. I don't think it gets to the same level as what we saw in the quote-unquote flash crash a couple of years ago, but it still was fairly unsettling. typically throughout the day I get a lot of emails in my inbox from a variety of exchanges announcing different developments or different trading developments, or maybe they're busting a trade here or there. So this stuff kind of is just background noise to me at this point. I see it filtering in throughout the day. I don't really pay much attention to it. And then yesterday, my first hint I had that something might be wrong was when I started getting a flurry of emails from NYSE saying, we're busting this, we're busting this, we're busting this, we're busting 35 classes here. And I kind of scratched my head and said, wow, that's an unusual amount of busts that are coming through. Something must be up. So I started filtering through the data and looking at what was going on. And sure enough, names like Citi and Bank of America and a bunch of others were being clipped 10% or more off some strange development. Turns out it was an algo, the quote-unquote rogue algo at work again. This time people are pointing the fingers over at Knight Capital Group, ticker symbol KCG. So yeah, a lot of people in turn pointed the finger at Knight Capital Group and the quote-unquote rogue algo that is everyone's favorite whipping boy these days, and they were not reluctant at all to dump Knight Capital, in fact cut the legs out from under them. This stock was trading $12 post-earnings pre-earnings a couple of days ago. They had earnings on the 18th. Stock got hit pretty good, down to $10 off of earnings anyway, so it was already on a downtrend. But then on the last couple of days, they really cut the legs out from under KCG. It was went from $10 all the way down to $3, and now it's trading south of $3, $2.85 right now as we speak, Sean. So the selling pressure, just ridiculous. It's off nearly 60% or four handles again today. So people are just really taking it out on KCG right now. Have you been getting a lot of orders in there at OX for people trying to leg in and out of KCG?
Moving in quite a few people, day trading. I mean, there is so much volume. You got people coming in here buying 20, 30,000 shares at a time. It's not too hard to scalp a nickel on this thing all day long. You got a 275 low and a 432 high. And, this thing started trading in about 2 hours, very heavily in the pre-market. So, quite a bit of action today. I think the major problem here is yesterday they estimated the loss roughly around 170 million. Now today we find out it could be 440 million. So, it's really being taken to the woodshed.
Whenever you hear people come out and estimate their losses in the beginning, we just saw it recently with JP Morgan and their quote-unquote hedge losses, and how they were obviously very, very far off from the truth, off from the mark. And it seems like Knight, the same thing again. So whenever you hear these first estimates of losses, I think you really have to do a 5x or 10x multiple in your head to really get at the truth these days. And it certainly seems like it's that way with Knight, at least post the mini crash or whatever you want to call it. But that mini crash brings up some interesting discussion points, and it's probably good for us to bring them up here on the show, particularly with you guys from OX on today, because I'm sure you guys got a flurry of inquiries yesterday from your customers. We certainly did at the Options Insider, just about what happens in these sorts of environments, how things are handled, how are trades busted, what happens to my options trades. And obviously I think maybe we'll start there. The bulk of these equity trades were all busted. So of course when that happens, your options trades on these very bizarre swings are in turn going to be busted. People sometimes think this is a great, oh wow, I can really get in and out of these trades and make a fantastic profit. I'm getting hit on my ridiculous far out of the money order that's been sitting there forever, and unfortunately there is no free lunch. The bulk of that is not going to materialize in anything. In fact, you probably have extra risk because you think you had a trade on. Maybe you hedged it or did something else against it when in reality those trades did not exist. So maybe Sean, why don't you walk some of our listeners here through that process of what steps you guys took to really to reroute around this issue and prevent it from really harming your customers.
Well, obviously, like many broker-dealers, we use many vendors, Knight being one of them. Correct me if I'm wrong on the time. I believe it was around 20 minutes after the open when you started seeing a flurry of like the emails you talked about where, NYSE's busting this, NYSE's busting this. So we know, as soon as we noticed that, it was literally about 20 seconds. We completely shut down all orders getting routed to Knight. Ones that were routed to them automatically rerouted to another vendor to stop any flurry of our customers' trades having to be possibly busted or having to wait maybe 4 or 5 hours to find out, is it busted or am I filled? What am I doing here? So we were not very heavily affected. It was a very limited number of trades where we, where it was a major concern of ours, whether or not, like I said, we busted, filled, canceled, give me an out, we need something there. So since we caught it pretty early, and it was like right around 9:50 Eastern time, shut it off, routed it to another couple vendors, and everything ran smoothly. Then I believe around noon, they supposedly came back up, were running 100%. We started routing them back to them with no problem for the remainder of the day. However, waking up this morning, we see about this $170 million estimate turning into a $440 million estimate. Our concern here is a company like this can go bankrupt, so we don't want to have multiple orders routing them with the possibility of a bankruptcy in the future. I'm not saying Knight will go bankrupt, but just for the security of our customers, we have completely routed away from Knight for the entire day today.
Yeah, it certainly seems like you're not alone in your concerns. 55,000 nearly AUG 2.5 puts have gone up so far today in Knight alone. It looks like a significant portion of those are buys. That's against a typical day's volume here in Knight of just 1,300 contracts. So just that one strike alone here in August doing a substantial multiplier on their typical ADV here in Knight. So a lot of interesting stuff going on. And I'm happy to hear that you guys were able to route around it so quickly. It doesn't really surprise me given, like you said, you saw the same warning signs that we saw. Obviously, you guys have been down this road already with May 10th. I'm sure have learned some lessons and had some big sit-down meetings from that development, as most brokers did, to say, how do we prepare for this in the future should this happen again? So I'm glad to hear that people are getting those plans in place and are able to switch so easily between vendors and between broker-dealers to prevent a lot of these customers. Because you're right, the real danger in these is that vague 4 to 5 hour period where you don't know, are you filled on this crazy 30% out of the money order you've been working for a month, or is it busted? Should you hedge it, should you not? There's a lot of crazy things that go into those types of environments, and that is just risk additive at the end of the day. So you don't want to have any of those situations if you can avoid them. So it's nice to hear that you guys were able to reroute relatively quickly and prevent OX customers from getting some of these erroneous fills.
I mean, this is another temporary blow to the retail investors' confidence. So, I mean, we want to prove to our clients that we're on top of stuff like this. So, I mean, your orders are not going to get hung up like they may have been in the past years ago, where you're waiting a day or possibly 2 days sometimes, wondering if you're filled or busted. So, I mean, the sad thing for KCG is, this is a $440 million error. They make their money on order flow. You got all these firms like us cutting them off. Where's their money, their income going to come in the future now? Yeah, eventually they'll be back up and running. They'll start getting the confidence back, but it may be a little while before people, or I should say broker-dealers, really start sending them a bulk of their order flow like they have in the past.
Yeah, when you make your living on order flow, you really need to have a reputation to back that up. And when you get hit like this, it certainly is difficult to rebuild that trust that so many vendors have with you. Because you're right, you can flip a switch these days and route to any number of other destinations, any number of other vendors, and any number of other firms, and it's difficult to bring that flow back once you've lost it. And speaking of losses, it has been a rough quarter for the options business. Of course, the big options industry volume numbers and market share numbers came out yesterday for July, and it was not exactly a banner month, as you might imagine, for the world of options. Options volume overall was down 12% in July. That, of course, the ADV was about 14 million contracts. That's 16% down from a year ago in the same period. Also, year-to-date contracts, we're seeing an ADV of about 16.5 million roughly, which is also down compared to about 17.7 million ADV of last year. So not exactly banner news for the options business, but of course not exactly surprising given the developments we've seen recently in the world of options. But there was one I suppose you can call it a modest bright note here. Not exactly super positive, but there were a few bright notes here because CBOE announced their earnings this morning, and of course the market's taking it to them a little bit today. They're down about 2% to 27.84, despite the fact that they posted some net income that was up from last year, which I think is overall surprising given the weak options volume across the board. But I think if you dig into the CBOE's numbers or just look at any of their announcements of late, you can see one of the few bright spots in the entire derivatives world has been VIX. We've been talking about VIX underperforming perhaps of late, but it hasn't been underperforming from a volume perspective. VIX futures volume in particular is off the charts. There was up 64% in July from July of last year, and the year-to-date volume in VIX futures is already up 80%, so almost double already from last year. So in vol futures land, things are looking quite rosy, and I'm sure that really was a big boon to the CBOE's numbers across the board. That was, like I said, one of the few bright spots we've seen anywhere in overall options numbers. Also, one of the interesting things I noted of last month's numbers is that div trades were again about 5% of overall industry volume. Of course, those are dividend trades, the trades we talked about on the show a number of times in the past where they really represent no real volume or economic activity in any way, shape, or form. People are really just trying to use some of the eccentricities of options settlement to try to game a dividend. And about 5% it was up from the month before. So div trades still holding strong. Apparently, regardless of the environment, Sean, it's still always a healthy time, or a healthy demand, I should say, for dividend trades going up here in the options market. I think without those, the numbers would have been substantially worse, as we're seeing. So interesting stuff going on in the land of options. And while we're here in the trading blog, we might as well delve into some of the other interesting stuff that's trading today. Like we talked about many times on the show in the past, Facebook been a subject of a lot of speculation. We had people writing in, should they trade this, should they trade that on Facebook? A lot of interesting stuff. We've talked about it quite a bit on the show, and these numbers looking pretty weak. And of course, Facebook taking a significant hit today, breaking through a significant floor, breaking through the 20 handle for the first time today. Facebook trading $19.90 as we speak, as we record this show. So that is a significant blow, I think, to all of these Facebook bulls who were lurking out there and thought this might be a blip on the old radar screen. Of course, Facebook options doing some substantial volume as well, doing about 370,000 contracts today on an ADV of about 200,000. Sean, are you guys taking a lot of Facebook orders today?
I mean, we are. Look at this big picture here. We're 90 cents away from this being 50% below the IPO price. And this, what was this, 3 months ago that came out?
It was in May, so yeah, not even 3 months ago.
So, I mean, we're 90 cents away from the IPO price being cut in half on one of the most anticipated IPOs since Google. It's absolutely amazing. Yeah, we're getting a ton of orders coming in. And it's not just all on the put side. We still have some clients that, thought maybe 25 was, going to be the low, and next thing you know, it's 22. Now we're below 20. I mean, I'm reading a lot of analysts saying that $12 to $14 may be a good entry price. I mean, I really don't know what to say about this.
That's amazing.
You look at Zynga, you look at Groupon. Later on in the show, obviously, we're going to talk about LinkedIn. I mean, a lot of these social networking sites are just taking a beating lately.
Well, if you're looking to leg in on the 11 or 12 or 12 to 14 range, I should say, not too many options choices really for you in terms of trading some downside. There's some activity here on the SEP 14 puts, trading a couple hundred contracts today, trading about 25 cents. So you could trade in and around those, I suppose, if you really are bearish here on Facebook. But of course, not too much indication that you need to be a bull right now in Facebook, given all the developments we've seen. It seems like the bloom is finally coming off that Web 2.0 rose a little bit, and people are starting to say, wait a minute, you have a business where you're kind of putting the business first and raising capital first and then making money and generating revenue and being a business model second. And Facebook's obviously a little bit different than a lot of the Web 2.0 companies in that they actually do make some money, so that's certainly something. But of course, nowhere near enough to justify some of these stratospheric, or let me say atmospheric. Let's think of what's even a crazier word there, Sean. Some of these just completely out of the realm of possibility. valuations we're seeing. And of course, with the trend being towards mobile, I know we as a web publisher, maybe we'll talk about this a little bit later, are looking at interesting ways to develop and work in the mobile space. And Facebook has an even bigger challenge in front of them because it's much more difficult to monetize that web traffic. And they've admitted that a number of times in their various analyst calls that the trend is going toward mobile, and yet they haven't really cracked that nut yet from a monetization standpoint. Facebook's also an interesting beast, too, in that they're ubiquitous, like I said on the show before. Everyone uses them for the most part. I don't. I'm one of the few who doesn't, but we have a corporate account there, so the business does. So you can follow us on Options Insider at Facebook if you want, or friend us, I should say. But if you talk to people, and a lot of polls have been put out recently about this, people who use it, people who don't use it across the board, there's just a huge negative opinion of the company as a whole. It's really up there with some of these other firms that are just very, very poorly regarded in the public's minds. People seem to use it because it's the big standard bearer now. There's not many other alternatives to it, but it really just seems like people have no love for this platform or for this product, and if they could switch off or have some sort of alternative, they certainly would. So that probably has to play into your risk calculations for Facebook as well. We all know how fickle this Web 2.0 traffic is. So if people can...
And we talk about some wild trades. We have 45 contracts traded today on the Jan 2014 $5 puts at 25 cents. I mean, the way this thing's going, I'm not saying the stock's going to go to $5, but there's no reason to say why it won't either. I mean, I was reading something yesterday. They may start charging some monthly services for, how LinkedIn has recently, they charge for an upgrade. Where you can do, I think you can broaden yourself to more recruiters, make yourself more, available. We're talking about Facebook possibly coming out with they said it's going to be free forever. However, they didn't say what service. So they left it kind of open. They may, may have like an upgraded service, charging somewhere between $1 to $1.42. I read a month. They got 950 million users. They say 550 million are active. If they lose some of those, and they charge $1, I mean, that's an extra 500 million a month.
All right, and listeners, we are joined here in progress by a man many of you may have forgotten. It's been so long since he's been on the show. He's been on vacation and traveling the globe, but now he's back, joining us via the magic of cell phone. None other than Uncle Mike Tusaw from Know Your Options, Inc. Uncle Mike, welcome back to the show, sir. It has been too long.
Oh, it's always great to be back. It was only 2 weeks. Heck, I missed one show, and I feel like I've been like your long-lost uncle or something.
The listeners, they're very fickle. It's what have you done for me lately? If you haven't been on in a couple of weeks, they're moving on to the next person. They've already really glommed on to Sean here. I think he's your replacement in many ways.
Oh, well, if he's my replacement, then I guess I'm doing okay.
Well, Uncle Mike, aside from traveling and having your vacation there, I know we had a big event in your neck of the woods, or I should say in your part of the world, perhaps, from a trading perspective. Of course, Apple earnings, and a lot of trading coming off since then. The thing's been all over the place, pre and post earnings, I should say. So why don't we start there with you? Give our listeners a bit of a rundown. I know going into earnings, I believe you were collared, what was it, 570 and 640, 650 around there? Is that where you were?
That's before that. I switched to a back spread right before earnings.
Oh, okay.
So I put it on, and then I left right before earnings, and I'm looking at my screen today. It's exactly where it was before earnings. So what did I miss?
As Andrew is wont to say on the show, were you able to do stuff while you were gone on the back spread?
Oh yeah, I had plenty of stuff done before I left, so I just think because the earnings were before I had left for a weekend getaway with the family. But basically, where it was going into earnings, I had the 5 long the stock, and then long for every 100 shares of stock, long 2 580 puts for August, and then short the 610 put for August. So I had a back spread, and I had built up a little bit of cost basis on the back spread from some of the collaring and just kind of getting into and getting out of a couple things and some premium selling. And so what happened was during earnings, Apple went down to 565 right there after the earnings call. I believe that's what the low was, if memory serves. And then when I was debating over doing the next day, when Apple was like around the 570 level, was just rolling down the puts, which normally I would have, but with vol as high as it was, The thing that I decided to do at that point was to do nothing. I was going to wait another day or two and maybe do something after like a day or so just to see how the market would react to it. And then, well, as for anyone that's been following Apple went right back up to where it was. So this is one time to where had I rolled down the long puts, probably could have been a little bit more of a profit. But the volatility or the pricing at the 570 level or at even the 560 level wasn't good enough, or it wasn't enough of a gain from the roll down for me to justify doing it because vol was so high with the at-the-money options at the time. So probably would have done a little bit better if we would have rolled it down, but ultimately the reason I didn't was because of the original objective of the back spread, and that was to hedge it. And if Apple were to continue to go down to 530, 520 or something along those lines, then I felt more comfortable having the 580 long puts instead. Now, since it's come up, I've done a couple of weekly 610 calls. I'm currently short the current week 615 call, and I'll probably just let that expire worthless tomorrow. I might get out of that today. We'll see what comes about in the last half hour of the trading day when I get off the show. I am watching it right now, so if you hear me all of a sudden say, there's plenty of reason to panic, oh crap, that you'll know what's going on. But for now, my plan in the meantime is that if we can stay around the 610 level, that back spread's going to work out almost ideal from the standpoint of a hedge. But in the meantime, we have a little bit of time decay coming into play with some of those weekly calls that I'm selling. So it's been busy, but I've been doing stuff, but not quite as much stuff as I had to do the last earnings call.
Yeah, Apple, one of the few bright marks on the sea of red today, up about 0.2%, trading nearly 608 right now. As we're recording this, up about 1 and change on the day so far. So that's one of the few up moves we've seen today, and pretty much everything else is down about 1% or so on the day. But, Mike, you bring up a good point. We always talk about the options portions and what we're trading here from an options perspective, but you're not really trading the options for the options' sake. You're trading them as a hedge for the underlying, and so you need to, that's your first and foremost consideration when you're going into this, is how you're going to hedge your client's underlying position. So sometimes what you might do from an options perspective and what you might do to hedge an underlying position would be two separate things. And so
absolutely.
So to maximize one, sometimes you have to turn down another sometimes, and that's the difficult balance you're playing with whenever you're using two positions to offset each other, to hedge each other in that sense. So yeah, listeners should bear that in mind when they're thinking about, Uncle Mike could have done this, or Uncle Mike could have done that, or he should have rolled it when he didn't, and all the many emails I'm sure you'll get after this show, Uncle Mike, saying, why didn't you do this? But it's all in the service of the client's stock at the end of the day.
Yeah, and that's the bottom line. I mean, there's a lot of money involved in this right now, and in doing so, I made the decision. I'm like, okay, I can roll this down right now if need be, but we still have another 3 weeks till expiration. Vol's high, and if we do snap back, we're going to be doing really well, and vol's going to go away, and we're going to make some pretty good cash on the short put on this back spread. And if we do go way up, I can make up for this by doing some covered calls if need be, and that's kind of the decision with which I made. Anything
else really increasing the BBI these days, or should I say decreasing the BBI, or what else is on your rate? What else is keeping you busy in the new office these days, Uncle Mike?
Well, I'm looking at gold still. We're short the 153 puts. We have a 153, 140 put spread on for right now. It looked like it was getting ready to break out the other day, but still hasn't done so. And for now, I'm just going to be a hedged premium seller instead of the gold collar man that I have been for so many years, I guess. And it's still. And if something's still, I'd much rather sell premium on for the time being. I'm looking, believe me, I want to get long the underlying again, but I just don't have the conviction and reason to do so right now. But if we break out, I'll be back in it.
You're begging. You're saying, please hit me on these 154 puts. I want to get back in, but they just won't let you, Uncle Mike.
Pretty much, well, 153 puts, because if we go below 153, I'll be more than happy to get back into it, but it's got to do it first, or we have to break out in one way or another to justify possibly buying some calls or getting in the underlying again.
All right, thank you for that, Uncle Mike, and now we're going to dive into a really quick odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and that funky tune means it's time once again for the old Odd Block. We're going to do a few little quick hits here in the old Odd Block across a number of different names that are catching our eye today here at the old Options Insider. From an unusual activity perspective, we're going to start off with Hewlett-Packard, ticker symbol HPQ. The bears are really piling in on HPQ today. Of course, the underlying is not doing too well today either. It hit a new 52-week low of 1756 this morning, and is now trading south of that to 1751. So this apparently is a new 52-week low. 1751 here. Not exactly bullish times for Hewlett-Packard. I'm not sure why people are hitting the stock. There must be some news coming out or something coming out that I just haven't had a chance to look. But we are seeing the put volume already well over 4x the company's typical ADV. So a lot of bears flocking into the puts. And what we're seeing primarily is a lot of activity on the AUG-17 put strike with about 16,000 contracts going up already today. The SEP-17 puts also lighting up the tape with about 28,000 contracts going up today, and the SEP-16 puts lighting up the tape with 14,000 contracts today. The bulk of those being buys. There is some trading between the strikes as well as some spreads, but overall the bulk of those are opening buys, and it's some interesting bearish paper. I haven't been following Hewlett-Packard of late, Sean or Uncle Mike. You guys know why this one's really attracting the bears today?
I'm looking actually right now.
I'll take that as a no. You keep looking, Sean, while I'll dive into the next one. Speaking of...
we do have earnings on the 22nd of August.
On the 22nd, yeah, we're pretty much well away from earnings at this point, so unless they pre-announce, I don't know. Unless it's just beat up on Hewlett-Packard Day today, I don't know. Sometimes... There was a court ruling in some patent litigation against Oracle, but they apparently won. So unless that's a very bearish development for them winning a patent lawsuit against Oracle, I'm not sure why the bears are flocking into HP right now. But we'll keep an eye on this one and let you know how it develops. And then we're going to move on to E-Trade, ticker symbol ETFC. What we see is the opposite side of the spectrum here in E-Trade with one very sizable opening call buyer here. Coming in with 10,000, or I should say picking up 10,000 of the SEP-8 calls this morning with prices ranging 27 to 28 cents, essentially lifting offers on these calls. And total on the day now, we've seen nearly 12,000 of these calls going up against an open interest of about 790 contracts. This is all opening paper. Also, this is not an earnings play because earnings are already on the 18th. E-Trade not exactly having a banner year. The past 6 months, it's really been beaten up quite a bit. It was trading $11.50, nearly $12 back in March and April of this year, and now it's trading $7.26 as we record this. So this guy looking to pick up some relatively near-term upside and relatively almost at the money upside at this point. This is a little bit better than what we typically see in the Odd Block, people flocking in and buying 30-40% out of the money calls. But on the flip side, I always hate to see people flocking in and putting a ton of money just on naked upside. There's so many better ways you could structure this: risk reversals, verticals, ratios, what have you, whatever floats your boat, rather than coming in and picking up 10 to 12,000 upside calls here, even if they are relatively close to ATM calls. And we're going to.
You think maybe he's protecting a short position?
Yeah, that could possibly be. This guy could be, aggressively short.
So maybe protecting a gain that is short that he's had for the last 6 months.
That's true. I shouldn't write him off completely because, this guy could be short from much higher and then decides that liquidity to hedge this is really much better in the options. So he picks up 10 to 12,000 for about 27 cents, and that locks in a fairly decent winner for him. So you're right. That could be a relatively, hopefully a long-term short because he had to ride E-Trade for a while to get most of those gains. But it could be a long-term short finally coming in and taking some of those profits off the table, or at least hedging them with the options. And last up... go ahead. Go ahead, John.
We're talking about September rates. They actually had I believe it was about a 75 lot on the October rates come in. And I think we paid about somewhere between 38 to 40 cents on the whole 75 lot. So, and again, this is a long, straight play buying the October 8 calls in the 38 to 40 cent range. So, not a large order, 75 contracts, but total volume today is 230. So, maybe we got something in the works here on E-Trade coming up.
Yeah, you're moving that tape there, Sean, with your 75 lots. A little bit here or there.
Yeah, I mean, E-Trade is always in the news as a possible buyout rumor, and they have been for some time.
This is I mean, it's not cheap, but it's somewhat cheaper than owning the stock, certainly. Speculation on some sort of near-term buyout activity here in E-Trade, which is the rumor du jour and has been for quite some time now. And we're going to finish things up here with a name I'm sure Uncle Mike is familiar with because he's got little guys at home, little guys and gals, and I have a little guy at home. This is LeapFrog. They make all those fun little toys that kids like these days, like their faux iPads and whatnot. And we're seeing some very substantial activity here in LeapFrog. This is a name that really doesn't trade much at all. It trades 300 contracts a day, typically putting up nearly 10,000 contracts today. The bulk of this really is in one, looks like a call roll for the most part, and also some opening paper as well. We're seeing nearly 5,000, 4,700 of these AUG 10 calls going up today with open interest of 2,700. So obviously, clearly someone is closing out a position there. We're also seeing about 2,500 of the AUG 7.5 calls going up today, nearly synonymous with the open interest on the AUG 10. So it looks like someone is closing and rolling to the downside. Maybe they're also putting on a spread on those two strikes, which is why the trading volume is about 2x the open interest here on the AUG 10 strikes. Most of these trades are going up mid-market. Looks like the AUG 10s were primarily buys, including a block of about 2,100 for 30 cents. It looks like we're seeing 2,500 going up in blocks, or I should say about 2,500 going up mid-market for $1.90 on the AUG 7.5 strike earlier today. Probably, like we said, a roll down from the AUG 10 strike. So some substantial volume here in LeapFrog. Kind of hard to really nail down exactly what the intention here is, given that so many of these were so mid-market and so out of sequence, these prints, that always makes it fun to dig into and interpret exactly what is going on, particularly on the limited schedule we have here on the show. Maybe this is another one we could dive into in a little bit more detail later. But that's going to do it right now for our abbreviated odd block. And now we're going to dive right into the Express block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and as usual, this is the portion of the show where the boys at OX hold down the reins. So, Mr. Sean, what is going on in the land of OX aside from those 75 lots and rerouting away from night yesterday? What else has been taking up your time?
Well, I do want to touch on a nice, interesting trade. Going back to the VIX, I had called in today. It was a VIX vertical spread here. I had a gentleman selling the 17 puts and buying the 15 puts for August for a 30-cent credit. The VIX has been, pretty much hovering around this $17.50 to $19 range the, last couple of days or so. These expired in 19 days on the 21st. With this bad news of late, I think this guy could be onto something. If we get another bad jobs number tomorrow, you have to figure sooner or later this VIX may come close to 20 again. Again, I want to repeat the trade. I believe it was about 1,200 contract vertical spread. Again, we sold the 17 puts, bought the 15s for a 30-cent credit. You're looking at roughly a $5,000 winner there if this thing all expires worthless and the VIX remains above 17. So again, VIX not moving so much to the downside, not moving so much to the upside, but it does tend to hold its premium because of the uncertainty sometimes we have in this market. But like we were talking about in the beginning of the show, people are still selling premium with this bad news going on. And one other thing I did want to touch on, I have a lot of customers calling me every day. I only have $5,000. I only have $15,000. I would love to trade Apple, Google, the Amazon price lines of the world. And options is where you do it, folks. We talked about the SIBO earnings and their volume and stuff. SIBO daily June volume was actually 4.6 million contracts a day. That's a 2% increase from June of 2011. A lot of that may have to do with the weeklies and the popularity gaining in weeklies. So a lot of clients I've been pointing out to, and options is not for everyone, because obviously you can lose everything you put into options. They can go to zero. However, if you're a smart trader, if you get some education prior to just jumping into the option world, whether you're just going to be a straight put or call buyer, doing some credit spreads, put spreads, doing some naked put, naked call, premium sellers, you can make money on the Apple, the Google, the Priceline, the Amazons in the world without having to just buy 5 shares of stock, where you can go in and buy 5 options instead and work an OCO order, which is a one cancels another order. You go in there, you buy, say, an option for $10. You have a specific goal in mind. You want to make $500, and you don't want to lose any more than 3. So you buy this option for 10, which is obviously $1,000 clients, and you put a $15 limit, and you say possibly put an $8 stop in there. So there is ways to trade these big boy stocks that are moving all the time, instead of having to stare at these boring Microsoft Disneys of the world that sometimes don't move for a week.
Microsoft getting a little bit more active these days, but yeah, not on the order of magnitude that Apple is these days. And of course, you mentioned a good point, using the weeklies, using some of the nearer term options to lower your outlay. Of course, when these minis finally do launch in probably a few months or so, the first target is of course Apple. So then you combine these minis with the weeklies, and you might actually have positions that people could actually afford to put on. And also, more interestingly, I think, also finally be able to hedge these fractional lots of Apple that everyone has lying around, 30 shares, 50 shares. Previously, you had no real way to hedge those unless you overhedged by buying a full contract. With the minis, at least now you have some more nuanced options for hedging those odd lots. I was talking to someone the other day about Apple in particular, and they brought up an interesting point that somewhere close to 50%, I believe the number was, of the volume going up in Apple is not even coming across the tape, because it's all sub round lots. It's all sub 100 shares. So that gives you some idea of how much of Apple is transacting in these odd little increments. And so to have some sort of options contract that can be used to hedge those or trade against those types of positions is certainly something that's very interesting, I think, for a lot of our listeners. So thank you for that, Sean. Now we're going to close out the Express block, and because we're running a bit long, we're going to skip over listener questions for today, listeners, and dive right into Around the Block.
Around the Block.
All right, and this is, of course, the portion of the show where we look ahead to what we're watching going into the weekend, and usually this is also the portion of the show where we could sit back and talk about some of the earnings that are trading right now after the close and then analyze them in a real-time fashion. Unfortunately, we're recording a little early today, so we won't be able to do that, but there are some interesting earnings coming out after the close. I've talked about this name a number of times on the show today as being one of my favorite risk reversal candidates. This is, of course, Activision. They're coming out after the close today. ATVI trading about $11.70 right now. Still a lot of interesting candidates there for strangles and risk reversals right now in Activision. Going into earnings, I've also been trading EA quite a bit. They've been on a bit of a downturn. They are, of course, the kind of counterpart or competitor to Activision in many ways. So a lot of interesting activity going on in that gaming space of late. I know Andrew has been a big fan of that lately. And then, of course, we also have after the bell, Sean alluded to it earlier in the show, LinkedIn coming out today. This is another one. We kind of scoffed at LinkedIn when it went public last year. Oh, this is another one, doesn't make much money. But I think in the subsequent explosion of Web 2.0 IPOs, LinkedIn is actually starting to look a little bit more attractive? Is they're one of the few who seem to actually have a business model and seem to actually have some revenue of any appreciable form. So that makes LinkedIn almost seem to be one of the more blue chip, if you can use that term to describe a Web 2.0 company these days. And they're, of course, trading at about $92.20 going into earnings tonight. After the close, and looking here at this 92.5 straddle in the weeklies, it's trading nearly about $11. So people are expecting some substantial moves here coming into the after hours on LinkedIn. Andrew, Uncle Mike, anything you guys are watching here for the next few sessions?
Just what's going on in Europe, as always. I'm sure that's a shocker to listeners that someone's actually watching what's going on in Europe.
Yeah, what's going on in Europe? I haven't even been paying attention. Is something going on there? Is there some delicious...
Oh, the Olympics.
Oh, yes,
yeah, I'm watching Michael Phelps.
That's right. I've been trying to watch the fencing. Kind of hard to find that one. I like some of the more obscure sports. That's the whole point of the Olympics, is to watch the obscure stuff. You can watch, basketball or whatever anytime you want. But digging into some of the more obscure, interesting stuff is kind of interesting to me.
Kayaking or, yeah.
I didn't realize that fencing was a match that's over in 30 seconds at times.
Well, the match isn't. The individual bouts of getting the points are. It takes those go pretty quick. It's very, very lightning fast. I used to fence back in the day, so I like it. I was an epee man myself, but yeah, kind of hard to find. I want to show my little guy. We've seen I showed some clips on YouTube of fencing. He thinks it's very interesting and intriguing, especially when he sees little kids doing it. But finding some ones in the Olympics to actually show him has been kind of hard because they're trading. Listen to me. Their broadcast is some crazy hours that are just difficult to track down. But fencing aside and Olympics aside, obviously Europe front of mind, top of mind for a lot of people. Sean, anything else you're watching going into the weekend here?
Well, I'm definitely got my eyes on LinkedIn. I took a peek yesterday at it. It was around 1-2. And then I didn't even realize, coming today, I realized it closed down $9 yesterday. It's down another $3 today. So now we're down $12 in 2 days. This could be, we got 4,800 of the $80 week one puts expiring tomorrow trading today. How many of those are put premium sellers, who knows? But, if you look at Facebook and Zynga, this could be the 3-team parlay right here.
Yeah, maybe
another social network are going down.
Maybe this is the next one to be struck down. Of course, I was joking about the blue chip. Just the fact that anyone makes any money in the Web 2.0 space is impressive these days, apparently. But yeah, it looks like, given the activity over the past few days, and you're right, they've really had their wings clipped over the past couple of days, that perhaps people are preparing for the some downside here in LinkedIn. Of course, if it's already moved 12 plus handles over the past few days, then maybe this $11 front month straddle is woefully underpriced. Of course, maybe the move already happened. We'll see. That's one of the great puzzles of earnings with options, is parsing out exactly what the level should be. And of course, Activision, LinkedIn after the close. Keep an eye on Europe. Work those Apple back spreads like Uncle Mike there in good old Apple. Uncle Mike, you missed our little Facebook discussion at the top of the show. Anything to say about Facebook breaking through the 20 handle? Any of your clients calling in looking to trade Facebook these days?
No, not really. Not really. I don't know. It's starting to look interesting to me. I'm not sure if it's, but I don't know. It's interesting to watch, but I don't know if I'd want to put my whole life savings into it now.
Sean was saying earlier at the top of the show that he's been reading some analysts looking at the 12 to 14 handle as an interesting entry point for LinkedIn. Of course, we always disparage analysts on this show, and with good reason, but that just shows how far the sentiment, the worm has turned on Facebook since their IPO, and people flocking to firms like OX saying, get me in at any price. I have a long-term hold to get me out the same day, to now I think I'm going to get in the 12 to 14 range. Certainly quite the change, quite the turnaround in expectations for this firm and for outlook for this firm going forward. Definitely the bloom is off the rose from a Web 2.0 perspective. Maybe Web 3.0 will save us. Who knows what that is, if that's mobile, if that's something else entirely. Holograms, who knows what Web 3.0 is, but maybe it's time to transition to that, because certainly 2.0 starting to be a bit of a bust, just like Web 1.0 was as well.
What seems to be going on here is Google is basically attacking Facebook for not taking that buyout. I'm sorry, not Facebook, Groupon. If you look at Groupon, what was that, $6 billion buyout?
Yeah, something in that range.
And now the company valuation is, I think it just dipped under $4.5 billion. And you see Google just going, I wanted to give you $6 billion. You didn't take it. Now we're going to start, doing something similar to you. We have more money and we're going to make it better.
Yeah, the downside is not only did they not take the money, so they didn't take that massive payment, which probably would have been good for their firm, but also now they have a massive competitor in their space. So they could have taken the money and also maybe not had a competitor breathing down their necks, and now they haven't done either. Of course, I can't really weep for the founders and early investors in Groupon. We've joked about it a number of times being a Grouponzi scheme on this show because it's really just been designed to feed those initial investors. All those rounds of financing they were raising towards the end and the IPO just all went to feed those early investors who got quite rich off of this, while everyone else here, all the underlying holders post-IPO, have been pretty much left holding the bag at this point. Groupon not exactly a stellar performer, trading $6.39 as we look at this. At this point, you can almost buy a basket of Facebook and Zynga and Groupon, and you can have for a $50 bill and still have some change. It's crazy. So yeah, not exactly banner times for Web 2.0. So unfortunately, that is going to do it for this episode of the Option Block. But before we go, I want to let my partners in crime here, my cohorts who were kind enough to join me on this earlier episode of the Option Block, to let our listeners know what's going on in their respective areas. Starting off with you, Uncle Mike. I know it's kind of hard to look into the future right now with so much going on in KYO land, but any insight as to when the webinar train will get back on the rails?
I just got out of a meeting on that probably actually right before I came onto the show today. We are very excited. We're probably going to get going into the weekly webinars again. We're going to have new content. We're going to have a whole new slew of things, not only from the standpoint of options, but also from the standpoint of technical analysis on stock selection, on futures, on pretty much everything that you can possibly think of in the investment world. I might even go out there and start talking about how to pick a checking account. We're coming full circle in a lot of ways. The expansion of our firm has just been unbelievable, and we're excited about what's in store. We have some accounts that we need to move over the course of the next couple of weeks, but once that gets done, probably in the fall, we'll look for a lot of new content coming out on the webinar train here at our firm.
Wow, that's exciting. I'm looking forward to seeing this explosion. I want to take the Uncle Mike seminar on how to pick a checking account, because I've never really gotten that down. So
that's going to come out right after How to Trade the Stupid.
There you go. There we go. How to balance your checkbook with Uncle Mike Tusa. And Sean, what is coming up in the land of OX that may interest our listeners?
Well, I know I did touch on this. I just want to mention we do have a workshop again in Raleigh, North Carolina. It will be this Saturday. It's an all-day event from 7:30 to 3:15 Central Time. You can check it out on optionsexpress.com. And this is a free workshop. I do want to point that out. And basically, one of our market-making educationers named Mr. Jim Ruzan will be teaching the mechanics and the logics behind some of the more complex strategies in the option world. So again, folks, this is a free seminar. All you got to do is show up, address, and you can simply register on optionsexpress.com, completely free, and highly recommend attending.
All right, thank you for that, Sean. And of course, if you want to learn more about any of the topics we discussed on the show today, like unusual activity or news from the options market or any of the other interesting topics we hit on the old option block today, then by all means surf on over to theoptionsinsider.com. You'll find all of that and much more there, including all of the other programs we offer on the fine Options Insider Radio Network. But like I said, that is going to do it for us here today. So everyone out there, have a great weekend, and we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.